Hi everyone. Today let's talk about the US deficit. Then we'll take a look at the stock for today, which is Casey's General Store. Then we'll take a look at some of the charts. Then we'll finish up with some trade ideas. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the US deficit topped a $500 billion in the first quarter of the fiscal year, which is an absolutely massive amount of money. $510 billion and a shortfall of $129 billion in just December. This is all on the back of the Inflation Reduction Act, which supposedly was supposed to reduce the deficit by hundreds of billions of dollars, but in fact it is actually running a deficit of hundreds of billions of dollars. So makes sense, does exactly the opposite of what it was said to do, and this is probably part of the reason that we're seeing markets go higher every single day. We are pumping money. This is all new money that didn't exist before. The government is borrowing it either from you or from overseas entities or from the Federal Reserve. They are pumping this money into the economy, spending it on whatever they think makes sense. And now we're seeing total government debt pass $34 trillion for the first time ever. And they say the deficit last year was $1.7 trillion, and it seems like this year they're going to spend even more than that. If they keep this pace, obviously they're going to spend more than $2 trillion above the federal budget, which is already around $4 trillion. So that would mean that the current government is going to spend more than $6 trillion this year, and that's with US GDP being around $24 trillion, meaning that the federal government is spending about a quarter of the current US GDP every single year, which is absolutely ridiculous. It's insane that they're spending that much money, especially in a time where the economy is generally pretty good. Interest rates are higher, the economy is expanding, even if it's slowly, and even with that, they continue to spend like drunken sailors. It's absolutely insane. The question is, when is all of this going to break down? We've already seen countries around the world slowing down their buying of US debt, and ultimately this will have some kind of impact on inflation. We've seen inflation kind of level out due to the Fed trying to fight this money continuously being pumped out by the government, but that fight seems to have kind of leveled out and stalled. And just for reference, we see current debt to GDP ratio at 120% in third quarter of 2023, which makes sense. If US GDP is around 24 trillion and the current government debt is around 34 trillion, it actually should be a little bit higher than that. So I wonder where they're coming up with those numbers. That's closer to 150%. So definitely something to keep an eye on. While this can be good for markets, eventually there will be an end. And then moving over to our stock for the day. This is a company that's actually the nation's 5th largest pizza chain. I don't think people think about pizza when it comes to Casey's. It's absolutely a general store and a gas station, but it says here the 5th largest pizza chain in the country, which is pretty insane when you think about it. Currently have 2,500 locations across 17 states. 17 states is not very many, and if this continues to expand the way that it has been, we could see Casey's actually go much, much higher in terms of stock price. And we'll take a look at the charts later. This has been an absolutely colossal gainer here. And it does seem like they're using pizza to offset tobacco sales, which continue to dwindle in the United States. Fuel margins are a pretty tough business. There's a lot of competition in fuel. It is a consistent business, but it doesn't make massive amounts of money due to those tighter margins. And look at these charts. Going back here to January of 2019, the stock price was down at 128.68, and current stock price is all the way up here at around 281.76. Again, we'll look at the charts later, but that is a massive, massive gain, more than 100% in just 3 years. So the stock continues to march higher every single day, and that's with them only in 17 states. If they continue to expand to all of these different states, that could absolutely be a massive driver for growth. And they do mention here they're also trying to grow their margins, currently sitting at about 10%. They think they can grow those margins up to 15%. I think that's probably a little bit aggressive, but if they do hit those targets, that could absolutely drive the price even higher as they continue to expand locations as well. They again mentioned the fact that fuel margins are going lower. They don't see any threat really from the EV market as that market continues to pull back as well. We've seen a pretty large uptick in hybrids, which seems to be the way that the US is going right now. Maybe we'll cover Toyota in another video. They are currently the market leader in terms of hybrids. And then they mentioned here the stock currently trades at 21.2 times forward earnings, below its historical average of 23.2. which is only slightly more expensive than the S&P 500 at 19.5 times, and really that number is driven mostly by tech and growth. So if you pulled those numbers out, S&P 500 would probably be a little bit lower, indicating that this stock is expensive, but based on what we're seeing here, it does seem like it can go higher. Current price targets sitting around that $300 range, which does give you about $17 of potential upside. They also continue to raise their dividend, 24 consecutive years of raising their dividend. The yield is only about 0.6%, so it's not a huge payer, but it is a nice little bonus for a stock that seems to continue to go higher. And then they mention another price target here at around $340, indicating about 20% upside. Continues to be a good investment across basically every metric. And then moving over here to the chart, starting off with the M2 money supply, you can see the peak here was back in April of 22, and since then we've downtrended pretty consistently. And sure enough, we did see downtrends throughout 2022, but if you look here, we broke above the 21 EMA. Obviously, these charts are not the same as your typical equities. They don't respond to EMAs the same way that an equity would, but it is certainly pretty interesting to see that it did bottom out here right at the end of October. And since then, you have the M2 money supply charging higher. Let's go ahead and overlay the S&P 500. That's what these blue lines here are indicating, major tops and major bottoms. So throughout this period, M2 was kind of tapering off, and it was flat here during May and June as well, despite the markets rallying. But if you notice, the bottom of the market here was 23 October. M2 money supply bottomed out at that same mark. And then you can see M2 rallying, and then you can see price action rallying. It doesn't always work that way. Sometimes it's offset a little bit. You can see M2 money supply peaked a little bit later than markets here in March of 22, and then they pulled back pretty significantly. And then you had markets recover a little bit while the M2 was moving lower. But right now, there's a pretty strong correlation between M2 and the markets. If we see a step down on this M2, that might be a little bit of an indicator that M2 is not going higher, at least in the short term. Something to watch here. So interesting correlation, bottom of M2 most recently and bottom of markets, and they are both rallying together. Moving over to Casey's General Store here on the weekly chart, you can see it's a pretty nice pattern straight up and to the right into that corner. Very consistent. Obviously, there's been some pretty big dips and rallies. You can see here from October of 16 down to June of 18 was about 28%. And then after that, it had another rally of about 86% up to the peaks here in December of 19. So definitely some decent moves. Not saying that it's straight up and to the right, but if you zoom out, certainly looks like a pretty good chart here. And then let's go ahead and zoom into the daily chart. We broke above this trend resistance here in September of 23. Marked a top around 19 September, touched the 55 EMA in October, and then rallied up, made a slightly higher high, dipped low, higher high. You can see it's a pretty weak trend, but it is in a trend on the daily chart. But the bigger news here is look at this pre-market gain. We closed at 285.58 and then pre-market here at 291.50. So big jump there. Let's go ahead and look at the 4-hour chart. Yeah, sure enough, massive gain here. So we finished in this range and we gapped all the way up above this previous wick high from 17 January. Definitely something to watch here on Casey's General Store. Again, price targets up around $300, up to around $320. And if they continue to expand, this looks like a pretty good opportunity. Moving over to the Tasty charts, you can see that third upper ATR band on the daily chart is currently sitting right in that range of the previous wick highs, 291.30, and that is where the price is in the pre-market. So the question is, can we get above that? You can see it does happen occasionally. This was a massive break higher here, all the way up to 283.30, well above that third ATR band. But eventually we did pull back into the middle of the range, touched the second lower ATR band, and rallied up to the second higher ATR band. And then we've kind of been in a consolidation, grinding slowly higher. So not a great risk reward when you're at that top ATR band. Doesn't mean that it can't go higher. We hit it here at 260, rallied up to 280 before pulling all the way back to that 260 level. So we did give back all of the gains above that ATR band. It's a pretty good metric, especially if you're looking at getting into a trade. It's not generally a great place to be. You can see here, similarly, broke above it, went sideways, broke above it, pulled back. Third ATR band on the daily chart, pretty consistent across most markets. Moving over to the options here, I did take a look at them. There's not a ton of volume on this stock. And looking back at the charts, you can see the volume was down in that 2,500 to 5,000 range per day. So not a highly traded stock. Definitely something you would want to buy and hold, not trade in and out of. And you can see all of the volume here on the options are zero. So even if you did get a fill, you'd be stuck to that. And the implied volatility here is not great either. So 280 puts for 25 days from now. It's a pretty wide spread, but only looking at about $2, $2.50, and that's if you could get a fill. So not a great return. That's about a 1% return in a month. Again, not a ton of volatility with a stock like this, but the options are not great. And then they do have earnings here on 5 March as well. So just keep that in mind if you're looking to trade the stock. We're basically at the highest ATR band, like I mentioned, on the charts, and the options volume in terms of trying to get into the stock at a cheaper price is not great either. Let me know down in the comment section what you think of the federal budget and their current spending habits. Is it sustainable? Do they need to pull back? Does it matter at all? Let me know your thoughts. And if you like Casey's General Store, put that down in the comments as well. What are your thoughts? Do you hold it? Are you looking to get in? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.